The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hello, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time, exactly this time, in fact, 11 o'clock until noon. This being Friday the 12th. Hey, we've got a lot going on here. I spent so much time making a decision this morning, last night, and then again this morning. And I'll explain exactly what it was that I was thinking. Since it's Technical Friday, let's just run the numbers. It's really important. We get them out the way. Dow's up 181 at 15,000. Let me just move this away here. The Dow's at 15,842. S&P's up 19 at 1848. The comp index is up 29. It's not as good as it should be, but it's up 29. Excuse me, it's up 30 at 42.96. You've finally got the VIX index pulling back. It's down $1.62, down 5.5% to 26.52 until it gets into the 25s and then the 22s. To be able to sustain a rally now is going to be really important. I'll go into all that. The E-minis, you're looking at them right here. Look at this very interesting chart pattern. You've got that H formation, lowercase h formation in the Chapman wave. That's the left side, right side, with a break of the low on the left side. But most of the other indices that I look at, the key ones, did not. So this is going to be really interesting. We've broken the August low of 1824.25 in the weekly chart. We took that out January the 20th. It went to 1804.25. Yesterday it went to 1802.50. It went even lower. And the weekly chart has made an arch formation with the lower left side, a lower right side price point, as opposed to the two left side previous lows of significance. Now, look at this chart. And this is one of the reasons why I had to make the decision this morning. It wasn't an easy decision because of a bunch of factors. However, since it's Technical Friday, I'm going to do a couple of things. I'm going to show you this chart, and I'll show you the plumb line right in the middle. That on the left is 1804.25. I spoke about this yesterday. That was on the 20th. Ran up to 1940, a peak G, a second peak G in the Chapman wave. That's at 1940, round number high. And that became the plumb line for a move in a large arch formation, one that I'll show you a little later in the weekly chart, that takes you right back to 1804.25, except that the S&P mini pierced that 1804.25 low. It went to 1802.50. You say, hey, what's the big deal? Less than 2 points. It is a big deal because it's part of my methodology. What happens on the left side? There are three outcomes. Well, the rally that started yesterday went to a peak A, peak B, peak C, and then extended to a peak D. I shouldn't say peak D, it's a leg D. We've got another 20 minutes to go before we know whether it's the peak D or not. So let me just get this out the way and show you that the fact that the stochastic and MACD were much stronger in this move down than in the previous move down to the 1821 level, said to me, there should be a good rebound. And that wasn't good enough. So let's just continue. I'm going to run the numbers with the gold. Gold is up. Was it now up? Let me just see. No, gold is down 12 at 12.35, having a spectacular move yesterday. And I showed subscribers where we were in the GLD and the gold, and I would discuss that this is a leg E or F, and that there should be a sharp move down. But I didn't think it was worth going short because there were other factors involved. Silver is at 15.69, down 10 cents. Platinum is down 5. You've got high-grade copper up 2 at 203. Very interesting moves in high-grade copper. Not fantastic, but good enough to say, hey, that's nice action. Crude oil is at this particular point, why is it saying 28? Let me just see. Crude something. Is there something wrong with that picture? Am I missing something here? Crude oil CL is at 28.84. Okay. And that's going to be very interesting. Crude oil is at 28.84. It's up 2.61. Nice rebound in oil. Now, of course, we know that there's a relationship between the oil and the actual market. I'm not sure quite why it should be like that, but it has been like that. So very nice pop in the oil contract, and we're seeing commensurate move in the market itself. And bonds are down over a point at 167.05, and the dollar itself is at, if I can just find it here, let me actually put this in here because I want to get the actual chart. The chart itself shows that the dollar is rallying, it's up 47 cents. Now, I'll just do this real quickly, then we'll go to our callers. I just wanted to show you the left side, right side price time match in the Dow came in yesterday without taking out the left side low of 15,370. And that was very important. It also never took out the 15,450 low of the 20th of January. So this is a very important move. And to top that off, I'm going to get into the technicals a little later as soon as we've taken calls. You see that candle, Chapman Wave Roman candle? I put in that Chapman Wave Roman candle. You see this one here? It's not the perfect, but it's a pretty close to a Chapman Wave Roman candle. There are three outcomes, as I say. The best outcome is that within a day or two, it should be 1 day actually, but within a day or two, the price that you're following closes above the high of that bar, in this case 15,897. Still got another 30 points to go, 0.82. And if that happens, a whole bunch of circumstances takes place because of the Chapman Wave lowercase h pattern. Can it go into an M pattern? That was what my big dilemma was this morning, and we resolved it just by going long. And the Dow. Let's go to Scott in Safety Harbor. Scott, how are you?
All over the place. You know, I was out of Alcoa. You made a good call on it. I think we had agreed that it was getting ready to burst to the top side. It did. It went to the 840 and then turned right back around and went down. So shame on you, greedy people that didn't get out. But I got back in yesterday at the opening at 754 and wrote it down, and then back in it today. So what does your crystal ball say, Basil? Okay,
so this is really important. Folks, what we're looking at is Alcoa. AA is the symbol. It's trading at 764. It's up 31 cents. I've made a big deal over the past, actually it's the past 6 weeks or so, about why some of these very low-priced, major heavy-duty cyclicals in the Dow, some of them were in the Dow, some of them are not anymore. But the Dow type, old school, old industrials, why were they moving higher? And you were looking at the Amazons, etc. And I did some work last night. I shouldn't say some work. I did a lot of work looking at all the percentage losses in the Dow stocks and a number of the NASDAQ stocks, and yet these little babies are acting very well. So you got your position. Are you back long again?
Yes, I got in at the 754 yesterday.
You stayed. Okay, so I'll be back with you in a moment.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Scott in Safety Harbor, Florida. We're looking at Alcoa. Alcoa is just really starting to pick up steam. It's at 765. So this is what I'm thinking here, Scott. There's going to be a point. What you're doing, I think, for stocks like these lower price stocks, like a U.S. Steel and Alcoa and some of the other very low price that are really heavy duty industrials that take a lot of energy. In many ways, both in,
well, let me
in the
interject
stock.
something, Basil. For people that are listening, some people go for any stock that's a low price. There's a big difference between what I'm doing and just picking. These are real solid companies that are at a low price
That have been around for forever. That's right, and that's my point here. That I think what we're looking at is that Alcoa and U.S. This is part of what the ongoing process that I've been going through for quite a while now. I'm trying to assess. I'm trying to eliminate not listening to what's being said by anyone in terms of influencing me, but I do listen to what people say. I'm saying I'm just going to ignore everything. I'm going to go with what I'm looking at, and that has to tell me what the major factors are that I got to consider. But you're looking at a stock in Alcoa that went from the almost $18, between $17 and $18, just a little over a year ago, all the way down to the sixes. And that is a huge hit and is telling us something. But at the same time, the fact that it's been attempting to form a base in that arch that went to an M pattern in the weekly chart, then broke down, didn't do a one-to-one to the downside, but instead made a pretty nice candle for a reversal candle. And that means that I believe that there's just enough residual strength to keep doing the trades that you're doing. There might be a point where you're doing the trade and it just takes off and it breaks out. Next thing you know, it's in the nines, and you say, oh, all I had to do was hold the darn thing, and I wouldn't have had to go in and out and in and out. But what you're doing for this stock and these types of stocks in this environment is it's perfect. That's exactly what you want to be saying. Choose the very best of the historical industrial stocks. Go in, go out, take your profits, and then come back in. Why? Because there's substance there, the way I'm looking at it technically. But at some point, we've got to be careful that it isn't foretelling us in that big move down that there's structurally something else that's going on that's much more serious. And that's why I say the going in and taking your profits and coming out is perfect. So what I'd be looking at is that the 120-minute chart suggests that if it closes near the high, it's at 768. So if it closes above 763 or higher, my next target, if I was looking at it just from the left side, resistance levels, the next target, which is 791, that was at 11:30 on the 10th. That would be the next target of resistance. However,
Basil, the only concern that I have is the split and how people will digest it. Not even the split, but how people will digest it. And I just, it's like a flip of a coin. You got people
when is
say,
that? When is that?
It's going to be good. It's going to be bad. So
when is that?
Sometime later this month.
Okay, and they're spinning off something. Is that right?
Right. Mm-hmm.
Yeah, okay. So that just as you're getting into it, all I can say to you is maybe it's better not to trade. Let it resolve itself, because you don't want to have a beautiful entry point and then find through the split that, in fact, it's messed up the stops that you have and all that. It's better just to wait. But you've got it right now. I'd get the exact date. I'd make sure that I'm not there for the exact date, because it can mess you up without changing anything, but the way it gets spun off is going to change the price.
Pun intended here, but I think there is truly what I call, and it makes no sense in anything that can be understood, but I call it a melt value. I think Alcoa itself has a value that's solid at around 6-something, and I don't think we're going to see it lower than that ever.
All right. Well, I don't know about the evers, but the way it's acting right now, I think you've got a great entry point. Just go step by step. And are you going to be holding it over the long weekend into Monday where we don't trade? But
boy, if I do, my wife will get so mad, because then I don't quite relax as well.
Yeah. So you know what? If you're making real nice money and you want to get out near the close, take the day off Monday. It's not a big deal. It's better than sitting there saying, "Uh-oh, what am I going to do? I can't do anything until Tuesday," and everything's going down.
One thing I've learned from you, Basil, is, take some of it off your plate. You don't have to, and then you can keep some if it does pop up to 9, and you still got some there, but take some of it off right now.
That's another way to do it. Hey, nice trade. Just watch for any turnaround later today. I don't think there will be, but if there is, I would say if it starts to break underneath the 753 open, I'd be a little careful. I'm not sure I'd want to hold it over the weekend. But so far, it's acting exactly how you want. Congratulations, Scott. Great move.
I'm doing great with your help there, Basil. Thank you. Bye-bye.
Thank you very much, and have a wonderful weekend. Let's go to George in New York. Hi, George.
Hi, Basil. George from Boston.
Oh, it says New York, but George from Boston. I was just saying to myself, I remember George from you last time as well. I think we got it wrong. So you're George from Boston. Want to talk about interest rates, and it said last time when you called interest rates, so I should have recognized that. George, how are you?
Good. I was supposed to call you back Wednesday, but I wanted to listen to Janet Yellen the last couple of days.
Okay. Did you get any help from Janet Yellen?
Well, like I said to you, I know most of it is noise, when people talk, whether it's analysts or whatever. But the Federal Reserve, I would say the last 7 or 8 years, this rally of 10,000 points or more, I'd say 70% of it is due to monetary policy, not fiscal policy. So I take whatever they do or say is long-term wise, maybe a year or two out. You have to listen very carefully. But in planning, I think what you do.
I think you're absolutely right, and there is a difference between fiscal and monetary policy. And the other thing that you want to be aware of is that Janet Yellen, in certain ways, is about as transparent as she can be. But at the same time, we also have to keep in mind that events are such that we can tell a lot about what options they will have based on the current market conditions. And there's just no question, as far as I'm concerned, looking at so many different areas, that there's been a rotational recession. Now, this is something I don't think I've even ever before, until the last month or so, discussed anything like a rotational recession. I do remember that in other periods, we've seen sectors come down, like the real estate would come down as the market was doing well. And then all of a sudden, the market came down, and you saw something occurring in the in 2003 or so, going to the 2007, the mid-2000s high in the different real estate sectors, in the different stocks. But this is the first time that I can actually document something that I don't know if it's ever, I'm not even sure it's a term, and that's what I call a rotational recession. And it seems to me that this is something that might be the one factor that turns out to be very good. I'd like to talk about interest rates. Can you hold on?
Yeah, I'll hold.
Okay, great. We've got George in Boston, and George wants to talk about interest rates, and we will do that. Dow's up 236, S&P's up 27.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and we're back with George in Boston, and we're going to continue talking about interest rates. I'm showing the TLT right here, having possibly made the peak F, just as gold has done in the, let me just do this, GLD. GLD is an F with a chance of a peak F in the daily, but the weekly is still strong. And this is really important. So, yes, George, so talk to me about the interest rates.
Yeah, it seems when they first came out, the Federal Reserve, in last summer, ever since then, they talked about increasing rates. They didn't do it till December, but ever since the summer, if you notice, it seems like there's been selling into every rally. Really,
Right.
the market's gone nowhere since last July. And I know China and oil and all that, to me, is noise. The real thing I think the market looks at, because what's been driving this rally the last 7-8 years, monetary policy. Now you have, yesterday, she wouldn't bend on not raising rates. I mean, they pushed her and they asked her, and she basically said that rates are going up unless something drastic happens in the market, like if there's, a sudden downturn or something. And,
Right.
and it seems, and also they have hawks, some new members who are hawks that just got appointed in January. This Esther George, she's come out publicly the last year or so saying that, it's time to raise rates. We can't keep
This
it
is
at
the
zero.
first time. Right, it's the first time it's been that persistent that we've heard
Right.
some of the Fed governors or people involved actually talking about higher rates. Yes.
I think until this cycle of rates, maybe they raise it 2, 3, 4 times this year, and then I think when they decide, okay, we're done for now, then I think the market will take off. Until then, I would think the market, since like July, is going to go up and down, selling to the rallies. You got the oil thing, you got China. Before, and what I didn't realize, Basil, is Jenny Yellen worked for President Clinton in his administration.
Yes.
And she's around the same age as Hillary. So,
Right.
I mean, they are, in a way, a political body. So I wouldn't be surprised to see her raising rates and stopping around maybe the September meeting. And
Wow.
that might
Okay.
help. You see what I mean? And that could help the Democratic candidate, if it is Hillary, because she's riding the coattails of Obama, saying, we can't stop what he's done,
Right,
et
right.
cetera, et cetera. So part of it is, of course, economics, but part of it could be politics, too.
Well, you see, this is why I always joke. I always say the Fed has nothing to do with politics. Of course, we know that it absolutely has to do with politics. I mean, that's just the way it is. But at the same time, I've had this theory, I don't know how long it is. I think it's actually more than 15 years, but it's a long, long time, that at some point the United States will do the same as Japan, because countries seem to imitate one another over a period of time, and that we would Japanize our bond yields. In other words, we would go down to zero. Now, that has kind of happened, but it hasn't happened to the full extent, and I'm suspecting that because there is what I call the commoditization of interest rates, yields, that is, that the Fed is really, they can't really raise the rate. They can do the threatening part of it. But if I keep looking at this correctly, and this is of course out, we don't know if I'm going to be right, but if this rotational recession that I'm looking at, if my thinking is correct, it means that even those monthly charts, which have been turning down sharply, very sharply, technically, that is, not just in price, but technically, I looked at these Dow stocks, and you know that except for maybe 4 or 5 of them out of the 30, majority have had 25 to over 50% declines. I mean, that is United Technologies, 32%. These are big numbers.
Oh, yeah, and also the bank stocks have come down to 25, 30%.
And the banks, well, you see,
I agree with you. I agree with you in the long term that rates are going to go down further than what they have been. But Stanley Fischer spoke a week or two ago, and they asked him why they're raising rates. And basically he said, well, we can't go below zero. He says so.
Well, they don't want to. But George.
And then I think if they do raise rates, I don't think it'll be much. And then, like you said, if you look at the 10-year and the 30-year bond, and the other countries, developed countries, Japan, Europe, we're the only game as far as yield to buy T-bonds. I think that's why the T-bonds, even though the Fed's raising rates, the T-bonds will stay low.
Right.
So I don't think it'll affect the economy. I would think it's almost like a game. Like they started in December, and I rarely have seen the Fed ever admit they're wrong or change policy on the dime.
Not on a dime, but
I would think in the long, short term that they'll raise rates, stop, and then that John Williams, the Fed president last year, came out with a paper citing a French economist that the real rate, this is last year, should be minus 4 or 5%.
Really?
The Fed funds rate. Oh, yeah. He came out. This is a voting member of the Fed, and she has mentioned that paper once or twice, Janet Yellen. So I think they're gearing up to do what you're seeing. In Sweden, they have the negative rates. In a few other countries.
And nobody wanted that.
Well, she said we're watching to see how it plays out. It's almost like they're the experiment, and then they're watching and probably, seeing how it works out. And then when it comes here, they'll be prepared, whether it's a year or 2 or 3 years from now.
George, you're making some very good points, but I let me tell you, the weight of this Japanization of our bond yields, to me, the weight is so strong that I think they're going to talk about it, but I'm not sure they're going to do it. So let's do this. I'll keep watching these rates. You've brought up some really good points. I appreciate it. I'm going to do a little bit of work over the weekend and see what I'm looking at in terms of the chart patterns of all 3 different rates that I track, the 30, the 10, and the 5, and we'll talk about it next week. I really appreciate you calling and good points. Thank you so much.
Thanks, Basil.
Thank you very much. And we're in freezing weather. Talking about rates going to 0. We're going down to 0 in our temperature. Let's go to Ben in Tallahassee. Ben, how are you? I hope Ben's still there. Ben, I know I was trying to get you, but George is making some good points. Ben wanted to talk about the GLD. Ben, I hope you're listening. Just if you have a chance, I know it's sometimes very difficult for you, just give a quick call back and say, I'm here in the middle of whatever I'm saying. I'll hear you. I'll talk about the GLD. The GLD went to 120.84. This is the Spider Gold Trust. It's a spectacular move in the monthly chart. We've seen these moves, not quite as big, but we've seen these moves many times before. Look back in July of 2013. It even went into August, and then it turned down to lower lows. Then we saw it again in, was that May? February of 2014. Big candle, gave it back up soon afterwards. Huge candle back in January of 2015. Gave it back, made lower lows. And then all of a sudden we get these 2 bars last month and this month. Huge. And that is really something that is very important. Ben, you there?
I am.
Okay, Ben. Of course, now I've got a break. But Ben, you want to look at the GLD. Can you hold through the break?
I can.
Okay, great. Because I wanted to talk about the GLD. This is one of the most important periods we've had in the last 2 weeks for gold. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and we're going to go back to Ben. Ben, I'm going to ask you just for 1 second. I'll answer these questions real quickly, then it gives us some time. And the question is, so I spoke about the TNX, and I think the TNX is ready for a bit of a bounce here. I didn't speak about the crude. Yes, I spoke about crude oil. This is a bounce, and it spiked higher. I think it can go a little bit higher, and it's helping the market. This is the shorter term, and we've got the New York Stock Exchange. The New York Stock Exchange, I think, has the same thing, that it could go on probably for, if it survives today very nicely and closes well, it can go into Monday, Tuesday. We've got to be a little bit careful to see where it's support. And the VIX index is at 2581. If the VIX can go down to 2550 or lower, that's going to help the market push higher. If the VIX starts to bounce and it goes to 2620, the rally for the day is over. Let's make it real simple. All right. So you wanted to look at the GL. Do you have a position in the GLD?
I do not.
Okay,
I'm looking at what I'm looking at is on the weekly and the monthly on a 3-year. What I'm looking at is, because one of the things that I feel is an incredible indicator are when you draw a boundary line across 3 points, either on the top or the bottom of 3 points of a long-term trend, the channel.
Okay. And we've broken that, right? Yeah,
and if you look at this, it looks like a perfect channel breakout, right? If you on the 3-year weekly and the monthly. So I guess the $1 million question I've got is, do you feel this is a real breakout, or what are your thoughts on a longer term, not the short term?
Okay, so we're looking specifically at the GLD. In the GLD, I'm going to say that when I have very long-term trend lines, I treat them as just one small aspect. I know that there are people that look at it and say, great, now we've broken out, that's it. Time alone will make you break out of a declining trend line or a rising trend line. So I only put stock into it in the sense that I say, great, now you can look at the upside resistance levels because it's established the fact that it's trying to break away from that trend line. But it doesn't say, oh, that's the big move, because I've seen it fail. Look, if you did this before, you would have had other trend lines and they tried to break out and then they failed. This is maybe not the best example, but there are examples of it. And you can see what I've drawn a long time ago, back in June, July of 2013. I drew the H pattern with that goes to a lowercase m. And look at all the M's that we've got there. Even though they're going to lower lows and lower highs, it's like a stair step to the downside. So the speed with which we've broken out now is really imperative. So now I say, okay, that is just one step. The most important step is that now it's starting to target the 200-period exponential moving average of 121.33. As the stochastic is rallying, it's still only at 60%. And the MACD is going up very sharply. I have a couple of indicators that are suggesting, And this is the reason why I want you to go. I wanted to go long today. Just more like the Dow. I did try for something else that hasn't worked out, but I just think in this case, I think it might have been just a tad early. I should have waited for a pullback. But in the index's case, the Dow, which is up 1.54%, the same as the S&P, is acting very well. So that's the reason why I wanted to go long the Dow, and I'll explain why. Because if I'm looking at gold correctly, the strength that we've seen over the last, especially in the last 2 weeks, is really important in that it is saying to me, keep focusing on gold as a fear factor and keep looking. If you don't mind, I'm just moving to another sector. Look at the XLF, which should be rallying today. It's up 72 cents. This is the weekly chart as the weakest sector, and it's kind of also based a little bit on yields. But in fact, at this particular point, I needed to focus on the XLF because the banking sector if the banking sector is weak, you will start to see that a lot of foreigners and people here, but I think mostly foreigners, start to say, oh, banks, we need to go to gold as a safety factor. So I think there's it's quite complex, but that's my thinking it now. Now I'm saying, okay, you can have a pullback. You can even have a whole week's pullback, because if you look at the daily chart, if I could just move this over, the daily chart has gapped up to a leg F, and that usually is not a good sign. It says while the technicals are still good, it could pull back, and it could pull back into the gap. And this is a huge gap going from 117.77 to the previous day of 114.52. You've got yourself a almost 3-point gap. So somewhere in the middle there, we're going to be coming down. What that does is that I need to look over the next 3-4 sessions, what is happening to the XLF? Because as I say, I'm tying my relationship is in looking at the overview is to put more focus into how is the XLF acting, that's the financials, as gold is acting. But I cannot ignore the dollar. And if you look at the smash in the dollar's got an incredible amount of work just to get back from the 101 area to the 95s that it hit yesterday, and now it's at 96. So even to get to the moving averages in the 96.60 to 97.12 area, it's going to take a lot of work. So I wanted to just say to you, yes, it's one factor. It is a very important factor. But my thinking here is more along how will the MACD and stochastic continue rallying in the weekly chart and thus help the monthly chart. And you've got that tiny monthly chart, the little candle of December. That's a positive so far. So in a sense, I'm looking at it and I'm saying, I'm trying to put this all into a nutshell. I'm trying to say that gold is a fear factor both in the financials and the general stock market is something that you've got to consider now that you've had this spectacular move, because it's saying we're in play. The gold stocks are in play and gold is in play. That's number one. Number two, to confirm that it's in play, as you said, I'm showing it a shorter view now of the weekly right in the middle. You can see that it broke the down channel. That's one of the down channels that we're looking at, or down trend line. I haven't drawn the channel yet, but it's gone so close to the 121.33 200-period exponential moving average that I have to consider that maybe this leg C will go to a D. Every other time it's failed at B or C. Maybe this time it goes. So is your bias to be looking at this as a long position, or it's the analysis that you're looking at?
Yeah, I was looking at this to potentially get in for a longer term trade. Maybe that you can't put those in the same sentence, but a longer term position on the next pullback.
Okay, so this is what I'm going to suggest to you. I like your thinking because you've done your homework, and I have to concur that it's in play. That's the most important thing. Is it out of play or is it in play? At this particular point, I have to consider that it's still in play, even though we're both looking at it saying, hey, Let's see if you can pull back. So the main thing is, how does it handle? Does it even get there? But by Wednesday of next week, does it get to 113.95, the 9-period moving average? Will it test 112? And my thinking is this, that if you're looking at a long-term play with higher highs, obviously you could even nibble here. What's the difference between 118 and 112 if you're really looking at 125 to 127? So as I'm looking at it right now, I'm kind of with you.
I got to go, but I really appreciate your feedback, and I'm
going to finish my thought.
You don't see any it's not like a no-brainer long position, I guess is what you're saying.
At this point, I'll.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I want to talk about just two things. One is because gold has had such a big move, it doesn't mean that it has to come and pull back. But my technical analysis says that based on my methodology, there should be some kind of a pullback. Is it a pullback like a rectangle formation and then it just has a high-level consolidation and then it moves higher? You know, looking at so many of these gold stocks, etc., my thinking here is I would rather wait a pullback than to grab it right now. And as far as the weekly is concerned, I need to wait for the end of the day so I can get the end of the week chart. I'll be doing more of that. We'll look at it again next week. I have patience. If gold is going much, much higher from here, there'll be plenty of opportunity to buy the gold stocks and to buy gold itself. So I don't think you need to be in a rush. If you really want, you can just take a little tiny piece of a GLD. I wouldn't even go to the GLD. I go to the IAU. It's what we use as my subscribers. It's 10th the price of the GLD, and the GLD trades at 10th the price of spot gold. So it's just a less expensive way It's the same thing. You're just buying it at a cheaper price. No, the same price, but split it different ways, okay? So the percentage is always just about the same. It's just a nicer way to do it. You can nibble, you can get it and say, hey, I've got some gold. That's the one thing. Now the other is, how can I do this? I've got a bunch of things I want to talk about. Limited time. All right, this is what I want you to do. The number of ads I'm hearing diverse things. Number one is the kind of wealth management portfolios that you always hear of. You get these things in the mail and you hear it on TV. Those are the people that are mostly saying, hey, just a pullback, buy for the long term because over a historic period, markets always go up. Then there's another crowd that says, look at your portfolio. Look at it. If it's down, something like we'll do an analysis or whatever it is, but it's saying, look at your portfolio. If it's down, watch out. So that's really making the investors nervous. But then I went through the Dow stocks and I went through a bunch of the NASDAQ stocks. They are down huge. Are they going to have another huge move to the downside without a decent bounce? My thinking is that rotational recession that I'm talking about, I would not be surprised if a chunk of the down move has already been accomplished. And now that's like an internal low with a residual low, a real residual low to come. That's my thinking. I just want to get that out the way. Then as far as the candles are concerned, because today we went to a higher high than yesterday. Yesterday's high was 50,897.82. Today's high is 50,916. That suggests to me, especially if we can close, I don't know, this is a big if, because there's a long weekend coming. Who's going to want to hold stocks over the weekend? But if there is a close above yesterday's high in the Dow of 15,898, let's call it, that's going to suggest to me that the 15,999 to 16,080 area is really what might be the arch formation. That's where the real test comes, because if it can go higher than that, we've got an H that goes to a full lowercase m pattern going all the way to the low 16,000s. And that would say, okay, that's the rest period. And then you remember the gold chart we were just looking at, the GLD? Remember these patterns right here, where you go to the H pattern and then you break down? That's what we're going to have to be really careful of later on. I don't think that, talking about Yellen, etc., I don't think they're going to do anything for February. And then in March, the market is going to suspect that there's going to be lower rates. And that's where end of March, beginning of April, is where we actually make a low. And that's the low that says, are we done? Are we going higher? Or is that it? Is that it for the market? And my feeling right now is something's going to happen to push this market higher later and not as bad on the downside as so many people think it's going to be. So where would I think the Dow could find tremendous? Well, let's do today, right now. Let's go to the VIX index, VIX.X. The VIX index is trading at 2601. If by the end of the day it's able to get to the 2550s or lower area as the market rallies, that's a really good sign to say, okay, you could keep coming down a little bit. If in fact it goes over
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,